Okay. This one is good now. You said in today's edition, no, I told you that I will first
Yes,
entertain some
yes.
questions. I will first entertain some questions to see clearly those people that are attending the class. I want to be sure all of us we are here, all of us that is here, we are very, very right, or we know what we are doing, not other way around.
Okay.
Before we move on to the next topic. So you are not telling me that gold, Abby.
Yes,
You said you want to check something on gold.
yes. The structure is bullish on a normal this thing. So I want to check, is creating a higher high and higher low. Then the market slow down again. What causes those kind of a thing? Because I check the market, you create another brick of structure.
This is okay. This is the answer to the assignment on gold. Hello. I will answer your question.
Yeah, yeah, yes.
Let me clear this
Okay,
liquidity. Let me clear this point of view. I will answer the question why the market slow down. You get it.
okay, okay.
Now, see here, if you want to mark your
Yes,
shifts on gold, gold is very crazy. It's a crazy pair. So if you want to mark
yes,
your shift, your change of character, number one thing you must observe is that your change of character. Did it align with a higher time frame bias? Let me tell you the reason why I'm very confident in this change of character. If you go to daily time frame, one day, you go to daily time frame, yeah, if you go to daily time frame, this is
okay,
where
okay,
this is where we are taking the trade. The trade is taken here from this rejection block. Call it rejection block.
okay,
There is a liquidity here. This is an inducement that guarantee us the trade.
okay, okay.
You get it? That is why we are taking this trade here.
Yes,
A lot of people are taking this trade here. Now, when this market come to this point, this liquidity point, all this place, this
yes,
thing I'm showing you now is under strategy. It's a training under strategy. So don't rush yourself. Oh. We are still going. We are still
yes,
coming there. But because of the question you asked, I
yes,
have to tell you this. Now, when this market come to this point, we have to check. We have to before we started buying. Then we have to go to change of. We have to check change of character to see if it's actually occurred. Now, how can we know that this change of character actually occurred? Okay, let me go to 30 minutes so that you can clear. Now, last um this is the last lower high.
okay,
Let me use this one lower low. Let me use this one as our lower low. This one as our lower low. Okay. This one as our
mm,
lower high. This one as our lower high. Now another lower low is being, after this lower high, there is a break of structure here. There is a break of structure here. Do you get it?
yes,
That's how you be marking, guys. If you are trying to mark your structure, this is how you be marking. You'll be following the trend. You'll be following the
okay,
trend. not other way around. Break of structure. I've already saved the pattern. Now, now this little pullback here, this little
Yes.
pullback here is also part of the game. Don't mind gold though. Gold is very, very foolish. If me, if I'm another peer expecting that a market will come to 50% range level, if I see gold, if it did not come to 50%, I will not bother because I know that gold is one of the pair that is very stupid. Any small thing pullback like this, I count it as my, in fact, I count it as my swing position. So I call this as my lower high. This is my lower high. It's my lower high. Let's put it here.
But
And
your cursor, I can't see where you are putting the cursor.
you can see my lower low. But you can see the test now. Can you see the test? Can you okay, let me delete this one. Maybe it is because of this one. What about now?
Hmm.
Eh?
I only see dots. I have to see dots. Yes.
I think if you click on the video and you try to zoom it, even on your phone, you'll see it better.
Can can
The
can we see it?
Yes, 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 sir.
The
yes,
where I put the last lower high and the lower low.
yes,
Yes, yes, sir.
Okay. So after this lower high has been created, another lower low has been was created here too. This one is the one that break the structure. This lower
yes,
high break this lower low structure. This small structure was broken.
yes,
Do you see the BOS?
yes, yes,
Now, then this particular area where market turned back, eh? In fact, this
yes.
is the let me say this is the PO high, this is the daily PO high that everybody we are expecting that something should happen. You know, it's from here that we are being expecting
Okay.
that something should happen, but something did not happen, then we have to wait. Then when we get to this area, then we are having a bullish momentum. Since we are having a bullish momentum, I just draw my, in fact, I draw this thing as there is the first change of character. I was the one that draw it. I sent it to the group. I've seen a change of character on gold. Some people are saying maybe it's small pullback. You know, that level is means change of character. Do you get it?
Yes.
Now, this is our change of character. What's wrong with this thing? You see that the last lower high that this last lower high that was supposed to be protected has been broken, has been cleared, and this is telling you that the market is changing momentum. You can see that when this lower high being broken, there is a pullback. This is the pullback. The pullback was
Yes.
what? Was a retracement. Is it not so?
Yes.
As we are being taught, the pullback was, you can call it pullback, you can call it retracement. After the retracement, there is an expansion. So the expansion was the one that break the structure. Then we now started another uptrend, which is this is higher high. This is higher high, and then you have higher low, higher low. You see it. Then
Yes.
gold. I told you
Yeah, yes, sir.
gold is a very crazy pair. You see the bad expansion here. I told you that anytime I'm trading gold, me, for any small pullback like this is my higher low. If it is another pair, I will have expect the pair to come to this level like this. So, but because it is gold is gold. People that know it very well. If you are not strong, you can't trade gold. So this little pullback you are seeing, that this higher low was the one that created this higher high, another higher high. We have another higher high here. We have another higher high. Why this dots that I put here, this pullback, they are the one that give me the higher low. Let me use 15 minutes so that I can clear 15 minutes. This 15 minutes is clear. After this higher this break of structure, this higher low is the one that break this structure. This higher low is the one that break this structure. Then it created another higher high. Then the little pullback here is my own higher low. You see, I call it my own higher low because anybody can call it his own. I don't know. It's my own higher low. So far that there is a pullback, it's my own higher low. Now, this higher low is the one that break another structure. You can see that the structure has been broken. Clearly,
Yes.
broke the structure here. That's how you'll be marking it. We have another higher high here, and this higher low broke the structure here, and there is a
Yes.
pullback again. This is the pullback created another what? Another higher
Hello.
low, another higher low. Then this pullback come here, play here, and finally broke what? Broke another structure.
Higher. Yes, another structure, then create another higher high.
This is the structure here. Broke another structure here. You have a BOS. This is the structure. This small structure you are seeing is a structure for me in gold. Any small thing is a structure. So far it's more than three, 1, 2, 3. It's more than three candle. It's a structure. You have a three candle here. So this is another higher high. Why? This is another higher low. Although some of this higher low will soon be cleared. Do you get it? Some of this higher low will soon be cleared, because some of this higher low there is an inducement around of the among of them. So I know gold will still come back here, maybe down here or even here, and clear all this higher low you are seeing, and turn them to be an inducement,
Yes.
and maybe later leave here. But there is a way we know. There's a way we know that it will clear it. If I want to know that it will clear it, I will just allow this chart to give me a 4 hours fair value gap. If I go to 4H now, so any liquidity that is around the 4H, I know that liquidity will soon be cleared. Like I've gotten a 4H gap here. So 4H, this is the 4H gap. Let me see any liquidity. There's one liquidity here. This higher low. Okay, higher high, higher low. This higher low. This higher low. Let me mark this higher low if I can get it. Now let me go back to 15 minutes. This higher low, this particular one is around the liquidity I'm saying. If you've been in the charts for long, you know what I mean. I know this small
Yes.
pullback you are seeing here. For me, if I want to trade it, it's going to be my inducement. It's going to be my inducement. If I want to trade, it's going to be my inducement. I know gold is still coming back to clear this higher low, and then later use this other block to pick his own trade, because this other block is a very nice. In fact, this is a very nice trade for me. Very nice trade. We have a mitigation. We have a mitigation here, mitigation, then another mitigation here around this area. This higher low is like an inducement. I told you that price cannot be going just zigzag without taking an inducement. What I mean is that
Yes.
price cannot be going like this, going like this, going like this, like rocket science. Price will still
Mm.
do something like this. You do something like this, do something like this. I will come back, eh? Then boom. This one that price came to clear is an inducement. For some people, they would think, is this a change in character? No, it's not a change in character. I mean, it's not a change of character. It's an inducement to people to clear some liquidity and move. Don't worry, when we get to an inducement class, you understand it better.
Okay.
That this is what I wrote. This is what I drew now. Like this area is where I will be expecting gold to play out very well. I want gold to come down, clear this liquidity, then boom. That is if it did not get to another uh, higher
Break
time
of
frame buyer.
structure. Yes.
Now you ask me that why is this very slow? Yeah, it is going to be very slow. As price is moving, it will be encountering a lot of challenge. This liquidity you are seeing, all these things they are called liquidity. Eh? They are called
Ye-
liquidity. There are challenges along the way. Around this area now, there is a fair value gap. There is a 4 hours fair value gap. Let me go to 4-ish. It's the one that is flowing the market. Market will be respecting every fair value gap along the way. Market will be respecting it because fair value gap is an imbalance in the market. Is is a is we call it internal liquidity. Yeah, we call it internal
Yes.
because it's one that pushes, moves the market. After external is the one that moves the market. So seeing this place now, this is this is the 4 hours fair value gap I'm talking about. This area, you see it. This is the
Yes.
4 hour fair value gap. You see when price mitigates it, what happens? There is a reaction, there is a drop down. It
Yes.
pushes the price down.
Yes.
If you check all your charts, every 4 hours fair value gap you'll be seeing along the way, there must be a reaction. Like this one now is another 4 hours fair value. If you don't know much about fair value gap, don't worry yourself. You will soon know it is among the topic. This is another 4 hours fair value gap. You see what happens when price get there? There is a retracement. So that doesn't mean that price will be selling from there. There must be a retracement. Price must push. Price must respect. It's pushed to do some balancing. So that is why market is slowing down there. Have I answered your question?
Yes. Yes. Thank you very much.
Any question? Any other question too? Since what we have been teaching so far, I didn't get something. I didn't get this. I didn't get that. Let us quickly go through it so that at least we can do one or two things today.
Yeah, I have a question.
Okay, what's your question?
So, I kind of get the idea of the change of character and break of structure. But my thing is, in class when you're teaching it, I understand it. But when
Okay,
I'm just looking at my own system, is just so I don't know the graph. I'm just not able to look at the charts like the
maybe
right way. But when I watch the video, I get what she's doing. But if I'm trying to replicate it, is something
what
I don't know.
first thing is what I if I give you an assignment, I'll give you an higher time frame. I'll give you a time frame to choose. First thing you have to do when you get into your chart to be more clearer. If I say 4 hours time frame, you go to 4 hours. Do you get it? Go to 4 hours time frame and zoom it very well. Like you zoom it like this. You see? You zoom it, make it very clearer. You zoom it like this. If I say 4 hours, oh, if I didn't mention 4 hours, don't go to 4 hours. If I say 30 minutes, like like this time frame now, I think, which one did I give you? Can you go to any of the pairs that I say that I give you time on it? Let me use that one as an example. You can check any of the pair in which I give you time.
1 second. You I get down the I think that's one we just did. Now that one was 30 minutes.
Okay, 30 minutes, Abi.
Yes.
It
Okay.
was, it was 30 minutes.
Yeah, 30 minutes. Yeah.
Assuming you open your chart now, I will still use another one as an example. You open your chart now, and the thing is like this. Then you go to the 30 minutes straight. You go to the 30 minutes. Do you see how it is on the board? Can you get anything out of this one like this?
No.
So the next thing you need to do is you expand. Do you know how to zoom in, zoom out?
Yeah.
Then you first expand it. This is an expand. You are expanding the chart. Then you now zoom it vertically. You make it very clear for yourself to understand better.
Oh, okay.
Do you see as the thing is clearing now?
Mm-hmm. Okay.
When it is now clear, then you don't need to go further. Just choose maybe this area, this area, this area, this area. As if it is not even clear, you even expand it very well. You expand it very well. Then you can now choose any of the area for your annotation. Like this area, you can choose this area. You can even choose the one you see clearly. You choose it.
Okay.
Usually, I was only marking. You can just use this brush tool to mark these tools. This tool to mark. I was only marking the every turning point. Turning point I'm seeing. The last one, I'm marking every turning point. You see?
Okay.
Then
Yes.
that's how you be using it to. You can now use text. Okay, to say, okay, this is my. You have already know this is a downtrend, a bearish trend. Then you know that every bearish trend has lower low, lower low. This is my lower high. This is my lower low. This is my lower low. This is my lower high because this high is lower than this high. Now this low is lower than this low. You mark it again until when you see the last lower high that was disrespected. That is when you now mark your change of character.
Change of character.
Once
Okay.
once you mark your change of character, then you can continue to be marking your higher high, higher low, higher high, higher low, higher high, higher low. You
Hmm.
get it?
Yes. Yes.
I
Yes. I
hope
get
I'm
it now.
clear.
Yes, I get it
Of
now.
course,
Thank you.
of course.
And another. Sorry. Go on.
Okay. Once you can zoom your chart very clearly, make it to be clear very well that you can see the turning point. The turning point is what you need to see very well. Then once you see the turning point, then you can be marking it, and that's all.
Okay. Okay.
All
And
right.
so also when reading the chat, I don't have to like go further down like the dates. I just need to just pick a point that I can see and just start doing my analysis from there, right?
For now,
Okay.
that is why
Okay.
that is why if I'm giving you an assignment, I will give you a time frame to check so that it won't disturb you. But if
Okay.
you are doing your analysis, you do analysis from a weekly time frame,
Hmm.
from a weekly down to daily, down to 4 hours.
Okay.
You get it? Then
Yes, I
those
do.
are the higher time frame, three higher time frame that is very important. A weekly candle, daily candle, 4 hours candle. Then you are picking your confirmation. Your confirmation should be like 1 hour, 30 minutes, 15 minutes.
Okay. Thank you. And another question, please.
Okay.
The the Nike tools, right? Like I really don't understand the logic with it. I don't know, if you can just
Which one?
like
Which
when
one?
we are getting the 0.5 what's it called? The Fibonacci tool when you're trying to
Do you
measure.
do you know where your Fibonacci tools is?
Yeah, I think it's the 1, 2, 3, 4. That's the fifth one, right? The
This
fifth
one,
icon.
this one is Gambox, so I use it for Fibonacci.
Oh, okay.
It has some settings. You want to get it. When
Okay.
you
Is
pick
that
this,
something that we need to do?
yes. When you pick it like this, and when you pick this Gambox like this, you just go to your settings. When you go to your settings, see, there is a lot of things I removed. All
Okay.
this, all this time level you are seeing. Let me come back again. See, any tool that you pick, it must bring its own setting. See, this is the setting. The setting will appear here. You get it. Then you go to setting. This setting icon. This setting icon. You click it. Once you click it, all this label you can. When you watch the video, then you can check out this label. What you leave is you leave a zero, you leave one, you leave 0.25, 0.5, 0.75. Then you will cancel this. You cancel this one. Just leave 0.1, 0.25, 0.5, and 0.75. Then once you leave those things, you click here, you unclick here, this left label, you unclick it, you remove it, you leave right label. Uh, your background, this background must, if this background is here, you will see the way it will be now. Do you see the way it will be?
Mm-hmm. Yeah.
But I don't like it like this. It won't make the chart to be clear. It is all about setting. I remove the background finally. So you see now, you see how it looks like now. Then you
Yeah.
can go to this time level. This time level, you off everything. You remove everything. All this time level, you remove it. I didn't use it because if they are there will be too many. Then after that, then you save your setting. That's all. That's how you. So if you not want to be using it, see, if you want to be using it, this GAN box, you want to be using it. Okay, maybe you want to pick from this high to this low. Now you now pick your GAN box, then you start it from this high, you draw it to this low. That's how you use it. Do you
Okay.
get it?
Yes. Thank you.
Hmm. You're welcome. Any other question? Please don't be shy. If you want to ask question, ask question. Don't be shy because after today, I will not go back to market structure again.
Hello,
Yes, hello.
hello. Please, I
Hello,
want
I
to
can
ask:
hear.
Is couch the same? Is couch the same as a change of character?
Yeah, they are the same. You mean CHOCH?
Uh,
Do you mean
yes.
CHOCH? Yeah, that's the meaning now. Coach, the change is
Uh,
CH or is zero. Character is CH. Just an abbreviation.
uh,
That's the meaning. All of them is just an abbreviation. You get it? Hello.
I have a question, sir.
Okay. What's the question?
Is change of character and breaking of structure are the same or not?
They are not the same. Oh.
Uh,
First thing you are going to see when a trend is changing is change of character. First break, the first break, change of character is also a break, but
Okay.
it's the first break. That is why they call it change of character, because it's the first break that was being broken. So after the change of character, any other break is what change break of structure.
Okay.
But the
Alright.
first break after a trend is being changed is called a change of. The meaning is that some people can call it market structure shift. That there is a shift in the market structure, that it has shift
Hmm.
from bearish to bullish. You get it? If
Okay,
you
sir.
see where they put MSS, market structure shift, is the same thing as a change of character. From my own findings, it's just like a lot of names being changed and given to all these things.
Yeah. Thank you, sir. That's my question.
It's not working again. Do you have any other person asking question? You are not clear from all these charts. You need anything to know? Hello.
Yeah, I have asked my question. I don't have any question. I don't know about
Okay.
others.
All right. So, in the absence of none, let's quickly just glance through the next topic. The next topic is, who can tell me the next
The
topic?
internal liquidity and external liquidity and range liquidity.
I put range liquidity there.
That that's what you said you are going to teach us. So because we are supposed to move to strategy edge and support and resistance. Hello?
I think it's the network.
He said? Okay. Thank you. I think, guys, that's what he said last now. The internal and the external liquidity, right?
I even wrote it down in my notes here. Internal and external range liquidity. Yeah, that's true.
Yeah, because from the beginning he didn't teach it. I was thinking maybe we are moving to the next topic. Then he now said we are going back to that number one.
Yes, yes,
Yes,
that's what I
that's
want.
true. Yes, sir. He said that last week.
That's what I want to do now.
Okay.
So, internal and external range liquidity. Let's move on it. You know, what's the meaning of liquidity? Liquidity is like a flow of money. Liquidity is what that moves this market. Because if there's no liquidity, the market will never move. If you see all these charts now, if you see all these charts now, all these turning points you are seeing,
We are
all
not seeing
these
the screen yet.
What is doing?
you are not seeing
Cannot
the
see the chat
screen.
anymore, sir.
It's network it has destabilized it. What I'm saying here is that hope you can see the screen now.
Yes, sir.
Yes, we can see it. Yeah.
So what I'm saying is that every turning point you are seeing in the market, they are called liquidity points. All these higher low, higher low, they are liquidity. When you are going further, you understand the reason why I said they are liquidity. Every turning point in the market, they are liquidity. Now, for market to move from external range to an internal range, external range to an internal range. That's how markets move. Now we know this is an uptrend, is it not so?
Yes, sir.
Now, in every uptrend, we call something swing structure. Please, this area, write it down very well because I will not repeat it. See, this place you are seeing, this higher high and higher low, they are called swing structure. They are the swing. This is the swing high, this is swing low. This is swing high, this is swing low. They are the swing structure. They are the main structure. Do you get it? Now,
Yes.
the reason why
Yes,
they
sir.
are called the reason why they are called swing structure is because from from all this movement, there is a lot of structure there too. Assuming that we are on 4 hour time frame. Assuming that we are on 4 hour time frame, eh? All this all this movement they are 4 hours time frame. Now, from here to here, from here to here is another structure. Do you know? It's another structure from a lower time frame, maybe 30 or 15-minute time frame.
Yes.
Because from here to here, it will be doing like this till it get to a turning point. Then boom. Now, this this higher high and higher low, they are swing high and swing low. Do you get it?
Yes,
Swing
sir.
high, swing low,
Yes, sir.
swing high, swing low. All these points, they are swing high, swing low. Any structure find, you find in the middle of them, they are called substructure or internal structure or minor structure. They are not in the structure, they are just a sub of the structure. I hope you can understand the memo.
Yes, yes.
Yes, sir.
Now, let me just go through something. You understand what I
And
mean?
in our assignment, I think that would be a better explanation. The last one, the GBP US dollar.
Okay. Great British pounds USD.
Yes, in daily time frame or four.
Okay, let's go to 4. Yes.
Okay.
Okay. Let me before I now I want to clear let me even clear it at once. Let me clear everything at once. This is the last higher low, while this is the last higher high that has been broken. This higher low has been broken here around this area. Now, um, this is a 4 hours time frame. This place and this place, this is a swing low and this is a swing high on the uptrend that is coming. Now, because the uptrend has now changed like to downtrend for some moments before it changed back. This place and this place, from this high to this low, is a swing structure. From this low to this high, they are called swing structure. Do you see all these things that is in the middle here? they are the minor structure. All this thing that is in it, if I circle it now, if I circle it now, if I circle it now, and let me go to 30 minutes time frame to see how the structure will form. Hello?
I sir.
Yes,
Okay.
we
Yes,
can hear
sir.
you.
I want to see if I'm Let me go to 30 minutes. Hope you can see the place I circled. Now, you see the 30 minutes that
Yes.
from this 30 minutes is another structure entirely. If I started marking it now, you see that is another structure. This higher high, higher low, higher high, higher low, higher high, higher low, until when it gets to a turning point. That's when it's now started turning back. So this, can I call this the main structure or swing structure? No, they are the internal structure. They are the substructure or minor structure among around every main structure. So in every swing structure, there must be a substructure. I'm coming on. I'm just trying to do clear something. This camera that is
Okay.
disturbing. So let me just draw it. Let me draw it back. We are on the chart. That's why. So what I mean is that from every pullback, all this you are seeing, they are the structure. But the main thing that is the main structure is this point. This point. That point of reversal and the point of continuation. All these points, they are the swing structure. Do you get it?
Yes,
Yes.
sir.
They are the swing structure. Now, coming back to internal and external range liquidity. Hmm. This trend I just drew now, what's the trend?
This is a bullish trend.
All right. Now, just know in your mind that market will move from internal to external, from external to internal,
Okay. Okay.
internal liquidity, internal range liquidity, liquid liquidity to external range liquidity. Now, what is internal range liquidity? Internal range liquidity are like fair value gaps, order block, breaker block, any block. That is the internal range liquidity. Please just keep it in mind because I'm not going to teach fair value gap and order block now. But I want you to have this topic in mind. When I now get to order block, you now understand what I mean and fair value gap. Just have it in mind. So they are the fair value gap, order block. Let me just put something down. Internal liquidity are the fair value gap, OB, order block, um, rejection block, rejection block, and so on and so forth. Why the internal range liquidity are the swing, are the main swing, I mean, why the external range liquidity are the main swing? I know you have lost now. Some people have lost, some people are getting it. Some people already know it before, but some people are lost. Um, let me put this higher high you are seeing, this higher high, and this higher low, this higher low. Eh? I will
Yes.
do it. I will explain it for you to be clearer now. I will explain it for you to be clearer. You will get it. This higher high here is the external range liquidity. You know, I told you that every turning point that there are liquidity. Do you know that? The liquidity is that the money that they are going to be cleared. They are called liquidity, that market is going to target them. Hey, let me use that language, that anywhere they call liquidity a targeted area, that price is targeting, that they give an assassin to, I mean, a sniper, they give him a work that you should assassin something. You know, it will target that thing. That target point is what they call liquidity. We call it liquidity point. So what is now the external? The external is the in an uptrend, all the higher highs, they are called the external. They are the external. They are being targeted because after higher low has been created, what is going to happen to this higher high? They are going to be cleared. Abi, is it not so?
Yes.
Yes,
Yes.
yes, sir.
After higher high has been created, another higher low will now be created. Market will retrace and create another higher low. Then after creating the higher low, this higher high you are seeing here, they will be cleared. They are liquidity. Money is resting upon them. That's where some people place their take profits. Also, some people are selling from there. Their stop loss is there. So buyers and sellers are there. There are liquidity points that market is going to target. If you are trading, maybe you are in an uptrend and market just created a higher high here. Then you waited as a good trader. You waited for the market to come below 50% fib level. Then you pick your order block or your fair value gap or your breaker block here. Where you pick your order block and market started going, market has created higher low there. Where do you think you go to pick, place your take profit? You place your take profit at this higher high, that you are taking your profit here because you know market is targeting that area. That is why you place your take profit there. So you understand that market will target it. It's a liquidity point. So market will get there. It's an external range liquidity. That is why you place your take profit there. If market is not coming there, will you place your take profit there?
No.
No.
Now, I now told you that from every market move from external range liquidity to internal, from internal to external. What did I mean? Now, this price is coming from this area. Then it created higher high. I told you that every higher high is what? External range liquidity. Now, market has created an external range liquidity. Then market now move from external to what? Internal. Higher low. Now, do you see this higher low? Where this market turn, you don't know what happened there. Why did it turn? Why did market turn from here? We all know that because this place is the market has already created an higher high. That is why market is turning back. We already know that market created higher high, then market must retrace. But around this area, what is making this market to turn from this line I drew? What is making this market to turn? There is something we call, let me just use this. There's something there, like What can make this market to turn here is like a fair value gap, order block, rejection block, breaker block. That is what can make this market to turn. Inversion fair value gap, let me say a volume imbalance, anything. They are the things that can make this market to turn from this area and started going up to clear the external range. So all these things that make this market to turn from this area, they are called internal range liquidity. Internal range liquidity. That is what I just give you here. They are called internal range liquidity. Hope you get the memo.
Yes, sir.
Hello.
Yes, sir. You are going to,
Okay.
sir.
So, as I told you that after an internal range liquidity has been cleared, what is the next target? I want to hear the answer now.
To clear the last high.
No, I don't want to use higher high now. After
Okay.
internal range liquidity has been cleared, what is the next target?
External range liquidity.
The market will go again and clear the external range. This is the external range. It will go and clear the external range and created another external range, which is the higher high.
Internal range.
No, it will created
external.
another external range. I told you that every higher high in a bullish market is the external. After market has created the external range, market will retrace back again and look for an internal range to be cleared. Cleared. That's why I say market move from external to internal, from internal to external, from external back to from internal back to external. That is how the liquidity means. That's why the external range liquidity. The reason why they are calling them liquidity is that on top of this place, market is going to clear it. There are liquidity. Around this area too, liquidity is there. Market is going to clear it. There are liquidity. Even if it is fair value gap, order block, so something, market is going to clear them. Market is going to touch them and turn back and clear them. That is what they call external and internal range liquidity. Let's go into charts and see examples. Let me go to 2 hours so that the thing can be more clear. Now, the turning point from this downtrend, we have higher high here. Market created this turning point, higher low, lower low, because the market has already changed now. Now, after this market has created these turning points, higher high, we have lower low. This is why I call this higher high, is because this is the last higher high. So anything that is coming below now to become lower high, lower high, lower high. Now, this is an external range liquidity. Created another external range liquidity. You know, the reason why it created another external is because it is changing point. It's changing, is a coach. So I will call this my external range liquidity. Now, after external range liquidity, it is the internal. This is the internal. This is the internal that was being created. I want to show you something. You might not. How can I cannot give you this sample. Okay. What I will do is that I will show you something now. You understand? No, I told you every liquidity is a clearing point, Abi. Hello, is somebody
Yes,
there?
sir. Yes, sir.
Yes, sir. Yes, sir.
Yes, sir.
Okay. Now, this area, I told you that external, internal range liquidity are like order block, breaker block, fair value gap. Now, this area where this market is turning point, why is it turning around this area? It's turning around this area because there is something here that is making this market to turn. What is here is called, from this place, we have, this is a fair value gap. Why this is an order block? This is an order block. Though we are still going to do order block class. But let me quickly just give you the meaning of order block. In a downtrend, the last buy candle before the sell candle movement is called an order block. Some people call it a supply block, like the supply area. You see this last green candle,
Yes.
this last green candle before this red candle movement up
Yes.
is an order block. So is a point of interest for an internal range liquidity. So most of these block price use it to turn back. You know, it is a retracement to price use it to
Yes.
turn back. And if you see on top of this block, at times you see that price clear it and enter into this fair value gap. So don't let us
Yes.
go. I just want to show you why price is turning back there. So where this price is turning back is called internal range liquidity because we are in a downtrend. Now, price is turning back to clear this lower low, which is the external range liquidity. There's liquidity. That last candle, the turning back is the liquidity. This week, this dot is the liquidity. There is a lot of lows. There is a lot of stop loss here. There is a lot of take profit here. Market is coming there to pick it, to clear it. So if market move from internal to external, now after creating another lower low, now this is a live market. So you are not, after creating another lower low, now the price is going for another uh, internal. Like what I expect the price to do is that go up like this, come down again and take this another lower low, go again, and take another lower low. Do you get it?
Yes, sir.
Yes, sir.
I hope you can get it with this my drawing. So this is what I expect price to do for me. It has cleared this lower low, this external range liquidity like this. I expect price to go to retrace up again and create another internal range liquidity. There's all these points you are seeing, they are liquidity points. You know, all these points you are seeing around this area, they are liquidity points. Price will use one of these, either there's an order block here, there's a fair value gap. Price will use either one of these and move again to clear this lower low and give me another lower low. So if it is me now, I will just place my order. I will just place my order here. I will place my order here because I have seen something that will make me to place this order. I will put my stop loss above any of the structural any of the area of interest that I saw. that know that is an evaluation area. Then I'll place my take profits around this next swing point. This is the next lower low. This is the next swing point that I expect price to retrace up and come down to clear it. The reason why I'm placing my order here at this internal range is because I saw something that can push market, and this price has already, I will make sure this price climb up to 50% and above before looking for a place to trade, to place my order. Then after price has taken my order, I will wait for price to clear this lower low. That's where I will put my take profit. That's why I said from every external rate liquidity, there is a lot of take profits. Even some people are buying here, and maybe they forget to stop their order, or they think that the market will be buying. Market will still come down and clear all the take profits, all the stop loss around this area. It is now depend the one you belong. Do you belong to the take profit or the stop loss? Now your strategy will tell. So that is for that. Do you have any question on that? On the external range, internal range, external range, internal range. Do you have any question?
Yes, I have a question, sir.
Okay, what's the question?
When you were um, talking about the internal and external range, when you were using the bullish trend as an example, you
Hmm.
said the higher high is the external, while the higher low is the internal, the point of retracement and expansion. But when you were talking about this bullish trend, this bearish trend now, you said the lower high is the internal. It's more like you interchange it, and the lower low is the external. Is that how? Is that the memo? I'm just asking. Just wanted to confirm the information from you, sir.
Yes, yes, that's the memo. This is what I this is what I explained. This is the chart. This is the uptrend. This is the uptrend. Why? This is the downtrend. Now, this uptrend has higher high. Abi,
Yes, sir.
the higher high is where the break of structure is, you know, so
Yes, sir.
Okay.
why they have higher low. They have higher low. Higher low. I want to make it to be very clear so that you will not be confused. Okay, now this is the downtrend. The downtrend has the downtrend has the lower low, lower low, um, lower high, lower high. Now, where is the break of structure for this downtrend? Is it not this area?
Yes, sir. That's the yes, sir. The lower low.
Now, I now told you that for to know to know an external range liquidity, external range must be if it is an uptrend, external range must be the higher high. All the higher highs, they are the external range because market is coming to clear them. They are the one that break structure. That's the external range. Internal are the higher lows, where the trade was peaked is the higher lows. This is the external range, internal. External range, internal. That's for uptrend. Now, the same thing downtrend, the lower high is the internal, while the lower low is the external, because that is where market is coming to break. Market is coming from internal to break the external, go back to internal, break the external to become break of structure, go back to internal range liquidity, break the external. That is the same thing I explained here. After the change of character, market now retrace back to create higher lower high, to create lower high around this area, which is going to be the internal range liquidity, and come down to break the lower low. Now, because this is a going market, is retracing up again after clearing this external range liquidity lower low, is now retracing up again. I know it's not retracing up to somewhere, create another lower high, come down again to break this lower low that has been created. Hope you can understand now.
Yes, sir. Yes, sir. It means that where the market breaks the structure is the external, and where it
Exactly.
retraces is the internal.
Exactly. Internal is where internal is where you go and buy the market. You are collecting the market and deliver it to the external. You are collecting goods from higher low, deliver it to higher high. You are collecting goods from lower high, deliver it to lower low. That's external to internal to external. After it's created another external, it comes back to internal, create another external. That's the meaning of external range liquidity and internal range liquidity. Any other question? We're
Yes,
already
sir.
through with
Thank
the
you, sir.
class. Hello.
Yeah, we can hear you, but maybe there will still be any other question. Anybody?
So anybody, before we round up the class, any other question from any other person? If there's no question, that means you've understand uh, what I just taught you this night. Too.
Yes, sir. Yes, sir.
All right. So the next topic on this list is we're going to the second topic, the strategy and edge.
Yes. Yes.
So for us to move up to this strategy and edge, that means you have already understand how to pick your structure. That if they wake you up in the midnight like this, you can actually, in fact, decode your structure. Is it not so?
Yes, sir.
Yes.
Yes, sir.